Well, folks, Palantir just blew the doors off. Unbelievable. We're going to go through everything in this video. The stock's making a big upward move, double-digit percentage up after hours. The stock got all the way down to $21 today. $21 is at $27 after hours. Congrats if anybody was out there picking up shares early this morning. I might have been picking up some shares early this morning. It was insane, right? Now, a lot of people went into these earnings. I came out with a video yesterday. Palantir stock's about to go insane again. I took everybody through exactly what was going to play out here, and that they were going to come in with EPS beats, that they were going to come in with revenue beats, what the stock price is going to do. I laid out the whole plan, right? And a lot of people obviously are big Palantir haters. Also, I have haters as well. So, you kind of got, I explained it like this on Twitch. I'm like, if you got, let's say 100,000 fans, you're going to have at least probably a 0.5% or 1% of people that don't like you, which means if you have 100,000 fans, you probably got 1,000 that probably don't like you and they want to see you lose money. They want to see you do bad. And just people just saying crazy stuff. Palantir's only going to grow 13%. Like, whoo, somebody had too much of the planet, right? Pablo, just like tattooed chef, that's always their fallback, like to make themselves feel good. You got to understand, I made a lot of money the last couple of years. And after I've made a lot of money in a couple of years, people are waiting for the next crash so they can put me down and try to make me feel bad and those sorts of things. I saw it in 2022. I come off of making a lot of money over that previous several years, and people couldn't wait. A certain amount of percentage of people couldn't wait till 2022 happened. They made fun of me every day. They said how bad I suck, and they made fun of me, and so just wait. Next crash, that's going to happen all over again. Trust me on that. $15 after earnings, this person was saying. Can't wait to buy the dip when it goes to 14 or lower. Wow, $14. How about that, right? It's a bear market. Palantir will go down regardless. Interesting, right? So the numbers, we're going to go over the numbers first. Shocking numbers. Just absolutely destroying analysts' expectations in regards to this. Analysts are so far wrong in regards to Palantir. Most investors are so far wrong in regards to what's going on with this business model and what they have going on. It's insane, okay? Then we're going to go through something very scary. I thought the last 4 minutes of the Palantir conference call was downright scary as just a human, okay? So we'll go through that, and I think that why that's important, okay? Then we're going to talk about what's my plans with the stock. We're up $84,000, up 172%. What's my plans here? Okay, we'll discuss that as well. And I was out there actually buying Palantir stock before these earnings here today. Now, additionally, at the very end of the video, I'll give you my thoughts on this market, if this downward move is going to continue or if this is just going to go to the wayside, okay? Appreciate everybody joining me as always. Thank you so much, everybody that's been here over the years, everybody that continues to be here through the ups and the downs of the market. Thank you for the people that are realistic and, are focused on building your wealth and learning from me and those sorts of things. I appreciate y'all in a massive, massive way. And so thanks for being here. New all-time high subscribers in the History Channel. I wish more people watched yesterday's video. That video ended up being a 10 of 10, means it was my worst performing video on my last 10 videos. And it's so sad, because so many people chose not to watch that video, and I ran them through exactly what was going to happen on the number side, what was going to happen with the stock price. I even gave them the call option. I mean, remember the 24 strike we talked about? Imagine you picked that up this morning. You would have probably paid about $1 for that max. I think you probably would have even maybe got it under $1 because the stock was at 21 this morning. So let's say you bought that option at 21, 22. You probably bought it for 50 cents, 75 cents, maybe $1. And my gosh, I ran everybody through everything, and just a lot of people chose not to watch it. So, and now for you guys that are actually focused on this market and want to build your wealth, I put this together late last night for you guys, because I'm like, we got a downtrending market here. We got crazy volatility. Let me put together a little kind of workshop piece that goes into detail on the 7 things you need to be doing when stocks are crashing. So I can either email it over to you or send it via text. I'll send you over the document. It's a good in-depth document that keeps you in the right state of mind on what you should be doing in the crash. It's absolutely free to access that. It will be the pinned comment down there, okay? So, do you want to see what a grade A income statement looks like? This is what it looks like. $678 million of revenue versus $533 million in the same quarter last year. How many companies are growing at that sort of clip in the public markets right now? In this situation with the consumer where it's at, with the economies where it's at, wow, very impressive numbers. Cost of revenue went to 128 from 106, so it didn't increase on an absolute basis even remotely close to as much as revenue went up, right? That's what we love to see. Gross profit exploded to $549 million of gross profit from $426. Sales and marketing was up a bit for the company, about $12 million, but that's when your revenue's up 150 million roughly, right? Sales and marketing being up 12 is not very much. Research and development was up about 9 mil. General and administrative G&A was up about 6 mil. That's not bad. Total operating expenses came in at 444 mil versus 416. Income from operations 10x'd on a year-over-year basis. How many companies have income from operations 10xing right now? They went from about $10 million of income from operations to over $100 million of income from operations this latest quarter. That's extraordinary. Interest income, they're making bank off all the cash this company has in treasuries. So they went from $30 million interest income to $46.5 million. Keep in mind that interest income, or if you're worried about, is that about to go away? It's going to be here for a little bit, because remember, a lot of these companies like a Palantir, they're probably tying their money up for 6-month or 12-month out treasuries. And so even when the Fed does start lowering rates, they're still going to likely be commanding 4 to 5% treasuries for a while, as in for at least probably the next 12 to 18 months. So a little food for thought in regards to that. As far as other expense, that was about $11 million versus $10 million in the same quarter last year. Income before income tax is $140 mil versus $30 mil in the same quarter last year. Net income $135 million versus $27 million in the same quarter last year. And then as far as EPS, if you look at a diluted basis, 6 cents versus 1 cent. Phenomenal. Check out the balance sheet. The balance sheet. Oh my gosh. Cash and cash equivalents, 512 mil. Marketable securities, about 3.5 mil. Oh, baby. And then look at total liabilities. Total liabilities, if you add up all their liabilities on this company, right? They're about $1 billion in total liabilities. That means they have about 4x the amount just in cash and marketable securities than they do in total liabilities, which is absolutely insane. What a great balance sheet. Total equity of the company's up to $4.1 billion from $3.5 billion. Ooh, smoking them. U.S. commercial. U.S. commercial, 55% growth. AIP continues to just be a beast for this company, and also it helps lead into Foundry, right? 83% year over year U.S. commercial customer count. That's key. The reason that's key is that's way outstripping U.S. commercial revenue. So don't be surprised if that commercial revenue number continues to uptrend here in the short term and plays a little bit of catch up to kind of where commercial customer count is at. That's very, very bullish for future numbers. This right here, okay? U.S. commercial remaining deal value 103% up year over year. U.S. commercial deals up 98% year over year. 3-year U.S. commercial customer count growth of 9x. They 9x'd in a matter of 3 years. The U.S. commercial customer count, crazy. U.S. commercial total contract value up 152% year over year. Woo wee! GAAP net income on this company. Check this out. Went from 16 mil to 28 mil to 71 mil to 93 mil to 105 mil to now $134 million of GAAP net income. It just keeps going up for this company. I don't see that trend reversing anytime soon. That GAAP net income should just continue to increase and increase and increase and increase, right? Now, there was a lot of people when this company finally flipped over bottom line profitability, meaning they started having net income. There's a lot of people that said, big deal. That's because they're making all this money from treasuries. They'll never have an operating income because the company had just been a huge operating loss company for the longest time, right? And so they said, this will never happen. There's no way they can flip because this is before the line item of interest income when you're talking about operating income, right? And, you know, we go back to Q4 2022. They had about a $17.8 million operating loss. And then they did the flip to 4.1 mil, right? And then when they kind of got to that 4 mil to 10 mil range, then the bears and the haters of Palantir, you know what they said after that? They said, oh, big deal. They're hardly making any operating income. It's going to go right back to an operating loss. Just you watch. Give it a quarter or two, right back to an operating loss. And then they 4x'd that operating income to 40 mil. Then they took it to 65 mil. Then they took it to 80 mil. Then they took it to 105 mil now at this point in time, and it continues to grow bigger and bigger and bigger and will continue to grow bigger and bigger. And the shorts and the haters of Palantir are just running out of ammo now at this point in time. Just to be quite frank, they're running out of ammo. They don't know where to go with this one. They don't know what to say anymore because the revenues continues to accelerate. The company is getting so profitable so quickly, right? The haters, there's a lot of them. You go back 2 years ago, my gosh, the amount of haters in regards to stock. And believe me, if Palantir's numbers miss today, they would have been out in full force talking so much trash about Palantir, absolutely trashing this company. But that's not the situation, so they're just running out of things, right? Now, the rule of 40, this is something a lot of folks, so when it comes to a SaaS-ish related company like a Palantir, we kind of get put into the SaaS category, right? People look at net dollar retention. People also look at what's called the rule of 40. The rule of 40 is a principle that states a software company's combined revenue growth rate and profit margin should equal or exceed 40%. SaaS companies above 40% are generating profit at a sustainable rate, whereas companies below 40% may face cash flow or liquidity issues, okay? This is very important because of this next slide. Palantir here is showing you the rule of 40. Now, for a while, when it came to the rule of 40, Palantir was kind of in a, that gray zone of like, ooh, you don't want to be here, was kind of around that 40% number where you want to get above that, right? Well, over the past several quarters, the company has exploded to the upside in regards to the rule of 40. It went from 38% to 46 to 54 to 57 to a booming 64% number in this latest quarter. So that is one of those things you look at, and if you're looking for something to make you feel extra good about with the state of Palantir, there it is right there in front of you. That's insane, right? And we're reaching levels that are special, very, very special, right? Now, what do you see when I show you this right here, right? U.S. commercial revenue growth 55%, commercial revenue growth 33%. Your brain should go to something right there when you see that immediately. What should it be? It should be international. What is going on with international, right? Because if U.S. commercial growth is 55%, but commercial growth in general is 33%, that means international is really weak, right? Now, how do I look at something like that, right? I look at that as a lot of these European companies are going to have to play catch up over this next several years. U.S. companies are very fast to adopt new technologies that can help their businesses make more money, spend less money, right? U.S. companies are very quick to adapt, and I'm not talking trash, I'm just being honest. This is why U.S. companies are the creme de la creme. When you look at what are all the biggest companies that are really running the world, they're all U.S. companies. And it's because these companies innovate at a faster scale, and it's because they're willing to adapt new technologies faster than anybody else is willing to adapt them. It's not because Americans are smarter than Europeans or anything like that. If anything, it might be the opposite. As an American, it might be the Europeans are smarter than us. But when it comes to business, like Europe moves way too slow. The whole culture over there moves way too slow in regards to everything. And that's why those companies do not innovate at the level. And you look at all the most impressive companies in the world, they're all U.S. companies, right? At the end of the day, when it comes to the European market, right, and outside of Europe as in general, they're going to have to adopt Palantir's technologies over time. And so I look at this as just another reason to feel good about Palantir's business model over the long term, knowing these international companies are going to come to Palantir. They are going to have to play catch up. And so let's say U.S. commercial growth slows down in a year or 2 years from now. I wouldn't be surprised if at that time, international growth is booming for the company and taking off like a rocket ship, right? Keep that in mind over the next several years. It's not something that's playing out right now, but it's going to be something that plays out over this next 2 or 3 years. Watch, okay? Watch it. Government revenue growth, 23%. Not the most insane number. It is a number that's slower than the overall business. Overall business is growing at 27%. Government business growing at 23%. Listen, guys, listen. This is big. The reason this is big, the government business has been a big holdback in recent quarters. The numbers have been extremely disappointing. And things are starting, keyword is starting to get back on the right track when it comes to their government revenue side of the business. And that's a large business on an absolute number. Look at the number. The absolute number is huge. $371 million. So when it comes to Palantir, the exciting part of the business, the reason I'm investing in this business is because of the commercial opportunity, right? Because that's just so insanely huge. But we have to admit, in the short term, meaning right now and over the next year or two, the government business is so substantial for this company because the absolute number is so big as a percent of the total revenue of the company, right? So when we talk about getting this business back going, you're talking about getting the revenue of the entire company back going in the right direction. And that's phenomenal to see. Phenomenal to see. Total revenue growth, 27%. Listen, guys, this leads to a question. So if you go back to Palantir after the IPO and kind of the first year of public company, Alex Karp always talked about revenue growth 30%. 30% a year compounded annual growth rate, right? And then that went bye-bye, right? The company started reporting less and less growth. All of a sudden it went down to 25%, 20%. And at the lows, it went all the way down to 12% revenue growth at the lows. And if I recall, that was early 2023, right? Somewhere around there. Revenue growth went bad, right? And you got so far from where revenue growth used to be, where revenue growth was, 30% plus, all the way down to 12% or so, right? And people started thinking, oh, this company might start growing single digits revenue. Like, it got really ugly there for a bit. Let's be honest, right? But now the company's revenue just keeps accelerating. And now you're looking, see a 27% revenue growth, and you got to start to think, is 30% on the table? Could we get back to Alex Karp's old number of 30%? It's something you have to at least consider. You have to at least consider it. It's certainly no guarantee, but we're not that far away. No different than people had to consider, like when Palantir was growing revenue to 12%, like could they go under 10%, right? Now you look at this and you're like, could 30 be on the table? It's a possibility. So very, very exciting what's going on with the revenue, right? Look at this. During the quarter, just during that 3-month span, they did 96 deals of at least $1 million. That's the thing with Palantir, you got to understand. When they land a customer, they land a customer. Like, they were talking about big money, big money, right? They landed 33 deals of at least $5 million. They landed 27 deals of at least $10 million. How many companies in the world, seriously, how many companies in the world did 27 deals of at least $10 million last quarter? I would really like to know that. There's probably only a handful of companies in the world that did 27 deals of at least $10 million. That's insane, right? They ended with $4 billion in cash equivalents, U.S. treasuries, and no debt on the company. So the balance sheet's in a phenomenal place. That's why I love holding Palantir. It's like you get the great revenue growth opportunity, the great profit growth opportunity, right? The great long-term business model there. But you also you can sleep well at night holding the stock. When you got $4 billion in cash and treasuries, right? And you got no debt, you get to sleep very well. And when you have contracts that are usually multi-years, you have a very sticky business model. Palantir's just, I don't know what other people view Palantir. Maybe they have trouble sleeping at night holding Palantir stock. Me? I hold this stock and I sleep very well at night. I don't stay up worried about, Palantir, what's going to happen with Palantir? Not me, baby. No, ma'am, no, sir. So they just raised all guidance. They're ahead of analysts across the board. They're ahead of the analysts on revenue, earnings per share, everything across the board, right? They're projecting for this upcoming quarter between $697 million and $701 million. Don't be surprised. Alex Karp and the team, I think they're starting to understand the game of Wall Street. The game of Wall Street is you put your numbers out there, maybe a little better than Wall Street's expecting, and then you raise your guidance, and then you come in and you beat those numbers, right? So my opinion is they might be sandbagging these numbers a little bit. They might come in with a 705, a 710, a 715 number next quarter, and then beat their already raised guidance. Something to keep in mind here. But they're beating analysts across the board. Look where analysts were at. Analysts were at 652 for revenue for this quarter, right? Obviously, you saw the number they did here. Let's go back to that. The number is 678. So they're considerably above where analysts were at. 678 there, right? And analysts were at 652. So they beat by what, $26 million? 680 analysts are at, right, for next quarter, and Palantir's at a midpoint of $699 million. So they're about $19 million ahead of where analysts were at for next quarter, right? Now they could probably still come in and beat that. So they're beating across the board, which is what I felt they were going to do, right? I said to you guys in that video I recorded for you yesterday. They're likely going to beat on EPS. They're going to guide higher. Boom, boom, boom. We got beats across the board, right? Now, another important thing here, and we're going to come back to this, why this is important in regards to the valuation of Palantir in just a moment. So remember that they're beating these analyst estimates and are likely going to continue to beat those analyst estimates. We'll come back to that in just a moment, okay? Net dollar retention, I think they should have highlighted this bigger in the presentation. Net dollar retention is going up. It's going up substantially. I think it was up about 300 basis points on just a quarter-over-quarter basis, if I recall. Net dollar retention came at 114% in Q2. That's moving in the right direction. You want to see net dollar retention for sure over 100%. When you're a SaaS-related company, right, you get put in that category, which Palantir does. Ideally, 110% plus. And then if you can go 120% plus for net dollar retention, you're special. Now, Palantir's up to 114%. So they're in a good area. If they can take that over 120%, they become a special company, okay? I'm telling you, if they take that net dollar retention over 120, you haven't seen anything in regards to stock price yet. Now, numbers are great. Everything's great across the board. They had a good conference call, but the last 4 minutes of the conference call did get scary. I'm going to be honest with you guys, okay? And basically, Alex Karp, he said it without saying it. It was kind of one of those things you kind of put the pieces together. And basically, what I ran from that, okay, is that Alex Karp is basically saying that Western leaders are kind of preparing for WW3, okay? And they're looking for ways that they could scale up factories and facilities in a quick amount of time to potentially produce lots of what you need in a WW3 situation, right? And the more I kind of think about it, the more I'm like, I could see a lot of Western leaders asking about that. You see Russia, Ukraine, right? Now you see what's going on in the Middle East, and it looks more and more like the U.S. and potentially allies of the U.S. could get more and more involved in what's going on in the Middle East. You have China, Taiwan out there. And so all of a sudden, if you have all these different conflicts all over the place and you're sending equipment and supplies everywhere, right? Suddenly you're going to have a bigger and bigger need for different factories to make things that you're sending to this, okay? And so think of it in terms of what happened in WW2. Next thing you know, you had car factories making stuff, right? You had, I think on the conference call, they talked about General Mills was producing stuff for that, right? And General Mills is obviously a company today we think about as a cereal company. You had massive amounts of big corporations, WW2, all of a sudden had to outfit their facilities to make the things they need for that situation. So it's scary. I don't like that. I don't like that because if we're going to that sort of place, it's going to mean a lot of bad stuff, right? But at the end of the day, Palantir is a must-need if you are going to that sort of situation, right? Because either you do prepare for that and hopefully it doesn't happen, right? Or you don't prepare and then you screw your society, right? And you screw what you've built there because you will be taken over, right? So it's either you prepare for the potential of us going this route, or you don't prepare and then you're screwed, right? Think about it in your own life. You can either prepare for getting a flat tire by saving extra money, right? And maybe that flat tire doesn't come, and so sweet, you have a bunch of extra money saved, and it was there just in case you got a flat tire, or I don't know, you lost your job or something like that, right? You're supposed to always have at least 6 months of your income in savings, right? In case you lose your job. Well, hopefully you don't lose your job, so you don't ever have to touch that money. And so that's a very similar situation that I think is going on here, where these Western leaders are trying to prep up in case things continue to escalate around the globe and things get a lot more violent, they get a lot worse here. And so scary, but I understand it. You gotta be prepared because you don't know what's gonna happen here. You don't know what's going to happen in the Middle East. You don't know how bad that's going to get. You don't know what's going to happen with Russia, Ukraine, and could that escalate to, a much more serious situation. You don't know what's going to happen with China, Taiwan. There's a lot of things out there right now that is, I understand, but that it's scary, right? So that the last few minutes of the call was kind of a little sobering, a little sad, right? But it's unfortunate, but it is the way it's got to be, right? Now, Palantir, in regards to what I'm planning on doing with the stock, my plans are, so I was buying the stock actively today, right? In which, I don't usually buy stock into earnings, but this was a freak situation where the stock was getting destroyed. I thought there was a high probability they were going to come in with great numbers, beat the estimates, beat guidance, and just, stock was going to be up and away. And so I kind of looked at it and I had to pick up some shares. But for now, I probably won't do anything. I'm certainly not selling my shares in regards to Palantir. There's no reason to sell. In terms of buying more, I'm probably good with what I have right now. So for me, at this point in time, between what the big share account I have in the public account, between what I have in private accounts, between what I have in the Patreon portfolio, I feel good with what I have in Palantir. Technically, I could always own more shares, right? But I feel comfortable with that. Now, remember what we talked about just a moment ago in terms of they're beating analyst estimates. Now, that's big, not just because it's big for the game of Wall Street of we're beating estimates, we're coming in with better guidance than people expected. It's big for this reason, okay? Check this out. So, go to 1000xstocks.com and we check out valuation of Palantir, right? And you see, oh, forward P 72, 2-year out forward P 58, right? Looks really expensive. And that's because this is obviously taking analyst estimates into account. Well, here's the deal. Palantir is beating analyst estimates considerably, right? They're probably going to continue to beat analyst estimates. Analysts are going to have to bring their EPS numbers up. Well, that means Palantir's actually not nearly as expensive as it looks on face value. The reality is a forward P is probably not 72 right now. It might be 60, might be 58. The 2-year out forward P is probably not 58. It's probably 50. It's probably 45, something like that, right? Because these analysts are wrong with their projections, and they're probably going to continue to be wrong, and they're going to have to bring up their numbers. So that's something I look out, and it makes me feel very comfortable with Palantir, because it could be confusing. It's like, oh, doesn't the stock look overvalued? Well, if they keep beating estimates, it's not going to be overvalued, and they'll eat that forward P up. They'll eat that 2-year forward P up. And keep in mind, a company like Palantir is growing at this sort of growth rate is going to command a 50-plus multiple on it. It just is. Like, when I say multiple, I'm talking forward P. It's almost guaranteed because you can't be growing. I mean, they grew their earnings per share. There's something like 500% year over year, right? You can't be growing that rapidly and then growing your revenue 27%. As a SaaS company that has a very sticky business model, you're going to be commanding very high multiples. And so Palantir might be a lot cheaper than people think it is right now. It's food for thought in regards to that, right? Now, let's end this video by talking about my thoughts on the market, right? Obviously, Dow down over 1,000 points here today. NASDAQ got hammered. Stocks across the board got hammered, right? I bought a lot of stocks today. Maybe I'll do a video on all the different stocks I bought. I bought a lot of stocks, right? So, do I think this is going to continue on? I kind of hope it does, but I'm not convinced. And the reason being is, in order to get a sustained market down, like down move, S&P 500 down 25, 30%, something like that, you have to have earnings really deteriorate for companies. And when I say companies, I'm not just talking about all companies, I'm talking about the top of the market. So obviously the top of the market's NVIDIA, Apple, Microsoft, Meta, Amazon, these sorts of companies, right? Are we going to see their earnings completely tank anytime soon? I'm not convinced of that. In 2022, you could tank the market, and you could tank the S&P and NASDAQ, and NASDAQ, I think, went 38% down, peak to trough there, and you could do that. Why? All those big tech companies' earnings tanked. So you could do that. You could pull that off. Now, I'm not convinced those companies' earnings are going to tank. They've got their employee counts in a very healthy place, right? They're not coming necessarily off a boom cycle for their business model, so I'm just not convinced that all their earnings are going to tank, right? If you go back to the great financial crisis, that was a 50% drawdown, peak to trough in the market. How'd you get that? You got that because a lot of the top of the market back in those days was oil and gas stocks, and oil went all the way down to $30-something a share, $30 a share, $30 in some change. I think it was down to like 33. Oil went down to per barrel, right? And so a lot of those oil and gas stocks got hit heavily during the GFC, right? And then additionally, just outside of that, everything kind of got hit as far as earnings-wise, right? And so it made sense that you were able to get a 50% drawdown in the market because all those earnings tanked. That's the only way you can get a big downsell in the market and a sustained downsell in the market is by earnings tanking. Growth rates completely tanking for these companies. And the good news for these companies is they don't have big growth rates right now. Look at Amazon. They grew revenue 10%. Wow. Look at Apple. They grew revenue 5%. It's not like we're coming off of some hype cycle where Amazon's growing revenues 30% or something like that, like they were back in 2021, right? Or Apple's growing revenues 30% or something like that. Like these companies were growing at these insane clips back in 2021. And then also in 2022, it was like the growth completely stalled out. And meanwhile, their expenses were going way higher. And next thing you know, their profitability got wrecked, right? And then the profitability started coming back in the back half of 2023. So when I look out there, I'm just not convinced any of that's going to play out. And so to get the market to really just get slammed, it's difficult right now. In the Japan, carry trade and all that stuff, that's going to be what that's going to be. But all that type of stuff, that's very short-term in nature. It's here today, gone tomorrow. Big falls in the market that are sustained for 3 months, 6 months, 9 months, 12 months, or longer, you got to have earnings tank. And I'm talking earnings at the top of the market. So if you can tell me earnings are going to tank for Microsoft, if you can tell me earnings are going to tank for Apple, as in their revenue, their net income is going to go very negative over the next year, and the same for Microsoft, and the same for Meta, and the same for Amazon, and all these companies at the top of the market, I could tell you, yeah, we could sell this market off big. That makes sense. But if you can't tell me that, we can't get a big sell-off in this market, man. Like when this is baby stuff. This is still like baby stuff. You know, when you talk about big sell-off, that's a 20%, 30% drawdown for the S&P. Then we're talking. When we talk big sell-off, we're talking 25%, 30% plus for the NASDAQ down. I think today we're down like 13% from the highs. You know, that's child's play. That's appetizer. Give me the appetizer. What's a good appetizer at Cheesecake Factory? They got a lot of them, right? Okay, guys, appreciate you joining me as always. Thanks so much for joining me. I spent a lot of time last night putting this together for you guys. 7 things to do when stocks are crashing. That's going to be pinned comment, free to access. Can email that document over to you, or you can send it via text, however you want it. You can get it, okay? All right, guys, much love as always. Appreciate you. I'll keep you up to date on everything. Make sure you follow me on the Reaction channel and have a great day.